In this video trade, it's a bit of a different one. We're going to talk about binary options. What happened to them? Stay tuned. Hey guys, welcome. So, a bit of a different video. This one we're talking about what happened to binary options, or why have they kind of disappeared off the face of the earth? Well, binary options, if you didn't know, they were all the rage a few years ago, probably not even that far ago depending on watching this video, and they were designed for people who didn't want to trade because you had those big risk warnings, right? Everyone's like, you could lose more than your account size, especially if you're trading, opening a spread bet account or a CFD account. And by the way, I'm talking this from a UK perspective. Things are different around the world, but people were like, I don't want to lose more than that. Okay, well, we've got something for you. Product, you can trade binaries. And how do binaries work? Well, binaries are basically a fixed odds bet. You basically say, I'm going to bet that the Dow is going to finish up in the next 5 minutes, and the return would be something like 85%. It would be a fixed return depending on what they're offering. And that was kind of the competitive advantage each of these were trying to do. And so the theory being is you could risk £100. You could say, well, in the next 5 minutes, 15 minutes, hour, whatever it was, I think the Dow's going to be above where it is now. And if you won, you'd get back your £100 plus £85. And that would be how it would work. And you could either go up or down. You could trade on smaller time frames, higher time frames, whatever. So that was one side of it. Then some of the other spread betting firms started to do ones that were quite interesting, actually. They started to do ones like one touch and ladders, where instead of having just fixed up or down and kind of skewing it in their favor, where 85% return, which is awful, basically taking 15% for themselves, they would do something like, okay, well, if you think the Dow is going to touch 20,000 today, and it might be 200 points away, they would price it and basically say to you, okay, you get 5 times your money back. So if you put £100 risk on, then you get 5 times that back. And it was basically packaged as a spread bet. Anyway, those were a little bit better because those offered a decent risk reward, and there was some opportunity there for a bit more of a serious trader. But that was a minority. The majority of the things offered were these things here. And actually, you know what? The reason a lot of people got into this was because people came along and said, hey, I don't want to risk all my money. I don't like the fact that you could lose more than your initial investment. It doesn't feel comfortable for me. We've got this product for you, sir, madam. Step this way. And of course, you know, they were rinsing people on this, basically saying it's a 50-50 shot. And 50-50 shot, you should be doubling your money, right? That's kind of efficiency for you. If you got coin toss, head or tails, it should be you make back double what you risk. That should be mathematically how it would work. And this is really, they were doing this, but they're taking a big haircut here. Now, I don't think this is a problem. And you know, ultimately, people can. I think I'm a kind of along the lines of and believe that people, as long as they're educated and not forced into doing something and not told lies, they should be able to do whatever they want with their money, whatever they want with their life. This was the problem, because a lot of these companies, unscrupulous companies, were pitching this, because when they ran out of all the traders, and the traders were like, you know, well, this isn't that great, we carried on trading our own little thing, or maybe went to some of the more providers that have some different options that were a bit more useful for us, then they kind of decided to open it out to everybody. And this was the problem. They were cold calling pensioners effectively and saying, hey, we're calling from Wall Street and we've got this new product. You could start with as little as £300. This is how you do it. All you got to do is this, you got to do that. And they were basically using high pressure boiler room sales tactics to get people who really shouldn't be involved in the markets at all to put in small sums of money. And then they would often they would say, well, we'll do it for you, and then they'd make them a little bit of money and say, why don't you put in 3,000, or you've got 30,000, and then these people would be rinsed for all their money. And that just becomes from offering a product that's not that attractive to scam level. And of course, when you go to scam level, all the authorities go, whoa, hang on a second, you know, you're now attracting people in who shouldn't even be involved in this thing. These things are already dubious at best, and now you're bringing in people who shouldn't even be remotely interested in this, so we're going to cut it down. That's when we had all the new rules coming in involved with spread betting and CFDs, etc., and binaries got bundled into that, and quite rightly from the perspective of what they were doing. You know, there are people who just shouldn't be trading. You know, you shouldn't be trading who shouldn't be involved in trading. Now, I should rephrase that. Who should, if they understand it, they understand the risks, they understand the rewards, they understand how much they're risking, how it works, then I'm happy for anybody to trade, you know, whatever age you are, as long as you're trading with capital you can afford to lose. People say, well, pensioners shouldn't be trading. Well, no, of course they can trade. If someone's in their 80s and they want to trade and they want to do it because they enjoy doing it, do I believe they should be putting their retirement pot in? No, I definitely do not. That's the problem with these binary things. If they want to put in a couple of thousand and do some research and do it properly, then why not? But that was the line that was ultimately crossed, and this is why we don't have them anymore. Or if we do, I don't see them around them. Maybe there's some other offshore places that are doing it that are completely unregulated and no one's kind of looking over their shoulder and can't do anything about it. Perhaps that's still going on. But ultimately the big firms and what have you have all stopped it and are only allowing it to certain specific clients. So the whole cold calling thing has gone. Does that mean it will go away? Do I think something else will come out? Probably it will. And guys, the trouble is with this is that it was pegged to the stock market because they're just using that as the underlying asset, if you like, that they were making this product from. And of course that then bundled in everything that was related to the stock market. To be honest, it could be pegged to a coin toss. You know, even you look at the casinos have their own algorithms that generate the roulette spin or generate the card thing. It's just an algo printing out and making it a nice visual thing for people who want to play on an online casino. And some of the odds on those, I'm sure, are awful, but they kind of allow it and they say this and they say that, and people can come along and stick the same amount of money on and risk all their money, and the authorities are okay with that. So it's one of those, isn't it? Yes, we don't want people getting involved in the markets who shouldn't be risking money that they can't afford to lose and don't understand the risks. But on the other side, if we're big boys and girls, we understand the risks and we still want to play, then, you know, we should be allowed to play with whatever we want and make our decision whether it's a good investment, a risky investment, awful investment, awful trade, all that kind of stuff. You know, we're our own kind of custodians of our own capital. So what's going to happen now? We'll see. ESMA is kind of been going for a while. They're going to review it. Are they going to change the structure of it? Let's see. They obviously, this is not a video about ESMA, but they basically came and they did all lots of margin changes and stuff like that as well. I've done a complete total video on that. However, this was the binary options side of it. So what's happened to them? They pretty much disappeared, and probably quite a good thing because they weren't that good anyway. They weren't very useful for us as traders, and we end up getting people in who really shouldn't be trading at all. When in actual fact, you know, if we digress slightly, and let's say somebody wants to trade with £1,000, say $1,000, they've got that spare, they understand the risks, then spread breaking CFD trading, spot FX isn't a bad thing for them to do. As long as they understand that £1,000 could disappear like that if they're not careful and they still want to enjoy it, then I think that's fine. However, one final thing, guys, is that, you know, understanding the risks, I think, is the big problem with people getting involved in trading. They don't understand the risks, and that's why they don't realize that that £1,000 that they're putting in couldn't just disappear if they trade too much size. They don't know where the risk comes from. There perhaps should be, in my opinion, there perhaps should be some compulsory course, short course, that goes through, rather than just a checkbox that says I understand the risk. It should be this. You should be tracked to watch this program that says, hey, this is the risk, this is how position sizing works, this is how gaps work, this is how economic data works. All the things that are the risk there that we know about, then there perhaps should be something like that out there that people go through to understand it. Because I think that's the issue. It's not that people are involved in stuff. Listen, if you're losing trades because you're losing money because you're losing trades, then that's fine. If you're losing money because you don't understand the risk, then that can be prevented, and that will help the industry in general, because people will be there for a longer term, have more longevity into it, we'll have better traders coming through, the industry will have a better reputation, all that kind of stuff. And also it will stop people who are just going to lose their money. No one wants to see people lose their money just because they don't understand the risk. I mean, that's ridiculous. If you're losing money because you're making bad trades, you're learning, that's the way it is. But if you're losing money because you didn't understand that there's going to be economic data, non-farm payrolls, you didn't understand position sizing, it doesn't make any sense for that. So anyway, guys, there's my 2 cents worth on what's happened to binary options, and I've digressed slightly onto risk management for new traders. Take care, guys, whatever you're doing. See you in the next one. Bye bye.